We have been anticipating this moment for literally years because affordability metrics show that a lot of people can qualify to purchase a home when mortgage rates are in the fives. And now, for the first time in 3 years, we're finally there. And while spring is always a special time in real estate markets across the country, I think we are gearing up for something fairy tale worthy this year. The reason I'm feeling so mystical, magical goes beyond interest rates. So I want you to stay tuned for the whole story time today. Historical data shows that sellers will net the most proceeds from the sale of their home if they sell it in May or June. Homes listed in these months not only sell faster, but receive more offers and net their sellers 2 to 10% more than the annual average that year. So, realtors advising their clients to prepare their homes for the spring buying season are basing that advice on more than just the curb appeal and the landscaping being green and the flowers blooming. Spring, it's favorable for buyers too. Families want to move during better, more predictable weather. They also want to be settled before the new school year starts. Corporate employees usually receive their relocation assignments this time of year. Many Americans are receiving their tax refund, which will be a nice little boost to the down payment fund. Although I do think it's worth a conversation with your lender about whether you should increase your down payment or pay off a high monthly debt. And by high, I mean the monthly payment on that debt is high because that could actually have a bigger impact on your buying power, but I digress. It's also, right now, the entrepreneur's moment of truth. This time of year, tax season, is a magical time for us in the mortgage space, regardless of what interest rates are doing. Roughly 1 in 10 Americans are self-employed. Qualifying for a mortgage is sometimes a paradoxical experience for these buyers. Business owners and independent contractors file their taxes with the goal being to have the lowest liability to the IRS, meaning to pay the least amount in taxes. By the way, the tax code, that contract that every single one of us signs with the US government but rarely fully understands, was written for this purpose, for the benefit of entrepreneurs and real estate investors. The government literally designed it full of loopholes to help these folks avoid paying taxes. No joke. So America's infrastructure, the budget or lack thereof, is funded on the backs of wage earners. But I find myself again going off on a tangent, so let's get back on track. Independent contractors, self-employed, business owners, they want to pay the least amount in taxes, and that's actually how the whole system was designed, so I'm not holding it against them. But this time of year is magical because you haven't yet filed your taxes as a business owner. If you can provide a draft of that return to your lender, you could save yourself a lot of heartache. Your lender can tell you what your buying power would be if you filed that return. This might influence how aggressive you want to be with your deductions, right? Or you could file your return without having your lender review it and just roll the dice for 1 full year. That's right. Once your taxes are filed as a business owner or an independent contractor, your buying power for a traditional mortgage is sealed for the full year. You can still qualify for a non-QM product like a bank statement loan or a profit and loss loan or an asset depletion loan. We have plenty of options out there for our self-employed borrowers, but if you want to qualify traditionally for the lowest possible interest rate, when you file your taxes, you are setting in stone your buying power all the way until you file taxes again the following April or October if you're one of those people. But here's this year's special sauce: interest rates. I made a video this week that popped off a little bit on Instagram. My guess is that people, both in the industry and outside, are getting so excited about this spring buying season because of interest rates. No shit, Sherlock. I know, that's what you're thinking. But obviously buyers are hyped up because they qualify for more house, right? Or the same amount of house with a better monthly payment, which is awesome. This will create a flurry of activity, and that fuels the real estate market. We've already talked about this, I know. I think we're fully clear on that part. Here's what I'm curious to find out. We've assumed that a lot of sellers stayed put longer than they wanted to because they were rate trapped. They wanted to downsize or move up or even just get a change of scenery, but they didn't because their interest rate would double or for some people even triple, and that was just too hard to stomach. These lower interest rates could unlock inventory. Sellers care about rates because what is a seller? A buyer on the other side. They got to have somewhere to go, right? Most of the time, anyways. And if they're not buying or not borrowing for their next purchase, they still like lower interest rates because they know that it'll create more buyer demand for their home. So, lower interest rates pushes more sellers to make moves. Let's see. Will we see more listings this spring buying season than we would if interest rates were still in the 6 to 7% range? Only a little longer, and time will tell us. We'll have the information we need. By the way, I'm going to go deeper on all of the data that we should be paying attention to form our strategies for this specific spring buying season on Property Pursuits this coming Wednesday, so you should definitely tune in.